Hi, my friends. I want to do a quick stock market update. Is this important time, for the Black Friday? This is a time where they can actually use a lot of different swings and come up to bat and try to do what they want to do and really control the market. Well, they always control it. Let's just say create more distractions with the market because they got every inch of it under control every day by second, right? Let's not assume for a minute. It just gets more crazy than it sees in the storage reports and how they swing everything, right? So I'm a little tired, so if I sound off, I apologize. Just had a long day here. Anyway, so I'm gonna give you this update too because you remember last time I put on those positions, shorting the Russell and also the natural gas, shorting both those. And I'll be honest, boy, I almost got jammed last week. But remember, I told you there was an escape. There's an escape exit out of both those. So always know where the exit door is. I told you the exit door, and it's coming. It's actually going to be there tomorrow. You actually make a profit on, take some off. My buddy who, he had worked in Alaska, he knows all about natural gas. He gave me some his feelings and thoughts last week, and he told me to pull it off that first trade, that first day, and I was like, no, but I'm gonna be a little greedy. That thing is, you got to be careful about greed, and I didn't put my stops in as usual. I got kind of busy, so but anyway, so it's gonna pan out okay. All right. So so let's go up there forward. So that was the TZA that had the position on, and also the gosh, I'm trying. I should know my own trades. It was the cold. Yeah. So anyway, let's take a look at this real quick. Already the futures are down. Look at this. S&P 500 right there, 6.8%. Dow futures down. Nasdaq down. Russell's down too. So that, and see, also crude oil is down. It's already 2.65%. Right. Gold, so they're selling everything off. Silver, see that what's really weird about this. Oops, sorry, there's a Black Friday. Well, crud. I need to come back here. There's crude oil, but anyway. What's interesting about this is the markets, nothing makes any sense anymore. Rules that we had for 50, 60 years no longer apply. The markets used to go down, gold and silver go up. They were a hedge, a safety net, but anyway, they just sell everything off. It's all assets either go down or up. It's crazy. And probably in crypto's down. Let's see, crypto down. It's crazy. They just sell everything off and they'll run to the bonds. And sometimes we see the bonds move in the same direction, which is crazy, as the markets. I mean, this is just absolute insanity. Just insanity. That, the typical, because even we're taught in school is when stock market goes up, interest rates go down. And when interest rates go down, stock market goes up. Oh, my goodness. Let's not go there. Everything is just completely upside down. Anyway. So, okay, the 10-year bond, looks like, see that thing, the 10-year bond's going down apparently, okay? Well, anyway, so let's take a look here. I'll keep moving forward to make this a quick one. Let's see. Taking a look here, let's see what we got. I'm sorry, I lost focus. Oh, the VIX. See this VIX right there? The VIX is trading at, that's the volatility index, right? And that's a gauge of the S&P 500, it's called the fear and greed index. And I'm telling you, sitting at 20.50, oh, that is perfect if you want to go short this market. I'm not kidding you. That is where you want the position, right around the 20 bucks there. Not 20 on those contracts. Oh, that did automatically without me touching it. Sorry about that. Let me bring that back up. The reason is, I'm going to tell you why that is so. Because if it gets above that, the 30s hanging around there, and trying to close some of these, I was looking at some things earlier. Sorry about that. Oh, you got to be kidding me. What happened here? Oh my gosh, did you have to bring this whole thing back up again? Well, I'll do that real quick. So you're talking while I do this. So anyway, okay, the volatility index here. The reason is because it gives you a shot from 20 to 35. Okay, 35. And it's kind of like we're on the 50-yard line if you want to describe it by football. And what is going on? Why is this so slow? You gotta be kidding me. I mean, this is ridiculous. Okay, so it gives you that window that now it gives the bears a better chance to start taking control of this market. Not kidding you. It's actually dangerous because it means that greed has gotten to be too much for the current conditions in this world. Okay, so the greed factor right there says 20.5. Oh my kidney. Now, if it even dips down, these around 18, you might, some people will start hedging, start going short the market. Not kidding you, if it goes under 20. And then if it hovers around 30, 35, then there's too much fear. Okay, that's what we saw. And I'll probably bring up the chart. Let's probably bring that up real quick. Yeah, see, okay, let's see how many, let's see, in 1 month here. And I know this is a drawing chart, but see, let's go 6 months here. All right, 6 months. I'll do full screen. Can I do that with sorry, my fin village? See, I usually I've been able to do a bigger view on my but for you to show you this, I have to do this crazy. You know, I have to work at it because I actually bring it bigger. I'll go full screen and go sideways, but I can't. I don't want to do that because unless you want to turn your monitor sideways. So here, see when it's up 35. See right there, right here, and they just smacked my damn door. That's not gonna get mad. It's all right. Mistakes happen. Kidding me, little girl. Boy, other people, they would have lost their cool, but I'm not gonna worry about it. So yeah, 35 because this material. I'm not gonna yell at some kid and run the damn night for just smacking. I mean, the whole car shook. Probably left a dent. I'm not kidding you. It's okay. Remember, there's times that we correct behavior, but I'm just not gonna make a deal about it, right? So sorry, you just can move on. In this world, it's material. I'm not gonna yell at some old girl in real life, but you know, the kids need to be taught to be more respectful and responsible and say, hey, I'm sorry. The parents just saw it and they didn't say anything. But you know what? I'm not gonna make a big deal of this one. You just don't be a Ken or a Karen, right? Okay, so see how we got the M pattern too? I'm gonna show you this right here. You know, I talked to you about M patterns. You can see where it's coming off now. See, that's the VIX now. So what that means when the VIX dropping, that means, so the market had to come down. I mean, the bears getting squashed, the market had to rise. See, there's right. See, when we're doing these arrows, the market was rising while that was occurring. See, the fear was just way too up here, right? So we had this M pattern, which tells you, I told you many times, you get an M pattern that tells you that the stock, in this case, the VIX, is going to go down, which means there's going to be buying because there's more greed stepping into the market. So we got this M pattern. So probably, you know, the thing is you got to be careful because VIX is not like a stock though, because it's just a fear and guilt matrix through the contracts. So you don't want to use this too much. But like right there would be like this. See, that's where right there is. It's called the bottom of the M. See how it's all a pattern there, and you got this M coming in here like this. Okay, so that's what you got there. So it's trading around. See, this one says 25, and that other one says, I don't know why it said, you know, 2050. Where are they getting that 2050? Is that what it closed at? I can't tell. Well, anyway, let's see. Oh, that's because we're over here. I'm sorry. Oh, there's the drop. I'm sorry because the M broke off. See how I try to hold that M right here? See, I'm sorry. And see, I'm trying. I mean, that's terrible. Then it'll pop. But see, but it'll come back into. It's called a retrace. Okay, I'm gonna try to bring this in. It's tighter here like this. See this? All right, let me do this and see that. And then you have what's called. See that it broke. It tried to hold that line, the M. Because sometimes it'll come back in and then fall off like this. But in this case, it just took it out. Eventually, try to go a little bit sideways. See how this? So what happened is you will still get this retrace back in here to here. That's why I'm saying you're in a good position. I'm not telling you what to do. I'm just saying this is what the trader is going to do. That they're going to start, the bears should start coming in and start shorting this thing because you're going to get it back into the 25 at minimum, which means the market's got to drop. Okay, the market has got to drop to make the VIX go up. Okay, because VIX is, it's all about, the whole world's about fear and greed, right? So that's why this is always a good tool to have in your belt. Okay. And so what else am I going to say about this? Oh my gosh, I'm trying to think. There's not really much. I'm going to have to move forward. Because, okay, so that's what I'm saying. So, yes, I should say where we're going to end with this. We'll have to do more analysis, but, you know, between here and back to that M line is where you'd take a bet and ride that as the market comes off, right? But like I said, once you get up in this 30 and 35 range, you might want to use precaution, okay? Because I can show you historically. Oh, see there, I can't, oh, shoot. Anyway, you get up in there, let's see. Now, see there, the VIX can be dropped. They can drop to 10s and 12s, by the way. Look at this. And you can sit there for months in those ranges. But with the wars and all this stuff and all these things happening, see how it's just 10s? You got to bump it up to the 20s. I'm not kidding you. In my opinion, from my experience in playing this market for so long, for so many years, that sure, it could drop all the way to 10. But boy, I tell you, that mean that, yeah. I mean, let's not go there. The current environment, you're in a cycle of this for the VIX, but you know, I mean, so that happening is going to be, you know, because even if it did, look how, even if you go down these 10s, watch, you'll see there'll be spikes into the 20, I see, where is it? Right here. No, see. I don't know. Well, anyway, God, I don't have a good example. Okay, let's move on. Okay, that's enough of that. What else? Oh my gosh, why am I'm doing a terrible job on this. It's probably gonna sit there and hang and do something slow again. Blah blah blah. I tell you, ridiculous. Okay. See, let's try just finance. What is going there? There we go. There we go. Come on. I saw this tourist. I don't know if you see that, tourist sparked outrage by climbing the Mayan pyramid. Okay, let's type in. Is it? I said cold. Okay, and there you go. Cold Pro Shares. That's the one that I have a position on. And I should, I'm not doing a really good. People that want to focus on stock market analysis and stuff, that's all they do for their channel. That's fine for them. I don't have time to do all that fancy dancy stuff in this. And I'm sorry, my friends. So I'm just trying to give you just a basic idea of what's happening in this world. Oh my goodness. Look at that candle. Oh, you know why that's important? Boy, they did a head fake. See, they did a head fake on me. They dropped it. Look at that. See, okay, you're wondering what I'm talking about, the volume. Look at that volume bar. Boom. That's happened. That happened on me last year. I was like, what is going on? They stepped in to wash everybody out on that was short the natural gas to try to bring the prices back up. Because it isn't a fault, I'm not kidding you. They hammered it. But see, what's good about it is, because I got in about, oh gosh, right. Decline that. And sorry, let's see. Okay, here's the deal. So there's a gap. Remember I told you the gaps have to be filled, and that's what they had. That's why they came in and filled that gap after that big sell-off on this. What is this natural gas, right? This is the short of natural gas. So this is the short of natural gas. So they had a big gap because they pushed the prices up. Oops, sorry. Right in here, I don't know if you can see that gap. See that gap in there? Right there. No, right, wrong side. Right on after that candle there, that day, there's a gap between those two right here. See that gap? Okay, sorry, I'm just doing the best I can. So that's why they came in and filled the gap here with the next stick, remember? But guess what? We still got a gap up here. Right here. Show this, right? There. That means natural gas is going to go lower, in my opinion. When? Yeah, I know, right? That's always the trick. But natural gas is going to be selling off. Yeah. So you can ride this short, and that's what I'm going to do, is going to ride this short until here, and hopefully I don't get pound. You know what I mean? And that's okay. So it's going to come up here, right? I'm going to not this. I'm going to ride this. This is the short of natural gas. I'm going to ride this up until here. Okay, that range, right? See what else we got here. Especially that candle. Look at the volume of the sucker. That means they really scared some people out there. It's a head fake, because next day they stepped in real slowly on this, right? It could go sideways too. But that was the thing is, remember I told you, I don't know if you saw the previous one, I was concerned about the double bottom. Where was that? I said we gotta be really careful. Remember I told you about a double bottom? Because double bottoms never last. They're temporary bounces. And they can last, oh my God, I really screwed this up. They can last a while, but we had a double bottom. Yeah, see even here, they had to fill that gap. See that gap that was here? That got filled just the other day. Look how long it took. Took 2 months to fill that gap. See that? Boom. They hit it, right? And then it causes mass panic because they said the gap's been filled. They step in the next day and create another gap and come back and hit it here. Isn't that crazy? All right, that's my football analogy. Remember I told you we got this head and shoulder pattern, which is kind of concerning too. You knew it's coming down, because I knew the risk. See this head and shoulder? Talking about you have a head and shoulder. There's a neckline that'll break the neckline. And then it'll be twice the neckline. So that's why we're down in here now, because here's a shoulder, here's a head, here's a shoulder, and it's called the neckline right there. Okay, and then they broke that, so we're down here now because you take the distance. There's some kind of rule, I can't remember. I don't know if it's from the shoulders. Oops, I just cleared shoulders to there, to there, to there, right? But it's all it's all the stuff in play. Okay, all right, so that's that deal. Boy, I don't really have time for the general markets because I got to get moving. They're always talking so long. Okay, So yeah, so this thing to play, you play it till you see above that 15. Okay. If you want to play it right there, right? There's even one up higher here. Look at this. Boy, that's a gap up there around 20. And actually there's this one's hard to get. This candle up here that has this big gap. It's called blow off the top. Oh, let's see. I'm sorry. I'm just doing a terrible job. That's a blow off the top. That last candle right. Try to do this with my finger. That one right there is blow off the top. That gap to fill. Boy, that's a tough one. Could happen though. Okay. All right. Let's see. That one. If that gap filled, you want to take that sucker off immediately once it does that blow off the top. That's as far as you want to go, my friends. You take that sucker off and walk away and say, boy, we got that one. Okay. Let's see. Oh, let's go to TZA. I'm going to do, because they have the short on with that symbol, TZA. And full screen. Let's see what we got here. I'm just doing patterning. You actually want to use moving averages, but I don't have time to fill this in while you're doing this, and I'm always in the move. Because you want to have the 20, the 50, the 200, and all these other moving averages. And boy, is that a gap fill? I don't know. See, look, I'm looking at the pattern here. Let's see what we got here. Let's see here. I'm trying to study the pattern. This is it's called a falling wedge. I see it already. Where see how it's descending wedge like this. The problem is this is an ETF, and the problem is they'll have those anyway because they have decay versus others. I probably should have brought up IWM. Let's actually do that because IWM is going to be the opposite direction of this because this is the short. Let's see. Oh, come on. And I'm going to pause that while we're waiting for that to load so you don't have to wait through that. All right, so I got the IWM, which is the Russell 2000 companies. Now here we have, okay, they filled that gap there on the downside. See, I just drew that. The gap was right there. Let's see, here we got, so they had to fill that one too. There's nothing they did a drop off in there. So what you got, it's called, is it a rising wedge? Not really. But boy, that line is about to be broken because usually what a rising wedge will do like this. It'll get tighter. It's already trying to tighten up though. Look, it's kind of. So here you got this line there at the bottom. And boy, if that breaks, see that's what we're waiting. So if that sucker changes below 185, that's coming down. And it's gonna come down to, so we should have the moving averages, to test the moving averages. So you can see a third line here. Let's see, I'm seeing it right there. That's going to be at least the minimum next move down, okay? And then you got another, that's the last support line. Is there another support line? Let's see here. Boy, I wish, it's hard for me to do this because I'm trying to do it for you at the same time, my friends, because normally I just way wider, have a better shot at it. Boy, I just can't really see that. Do we have any other gaps? Oh gosh, yes. Oh, you are kidding me. This one right there, that sucker between this candle and that candle. We got this gap here and a gap here. Oh, you are kidding me. So we're going to see this move down here, fill that gap right there. Yep. Was that about 160, 170, 178 or something like that, somewhere in there, right? So that's going to trade about 178. So market's coming down. Okay. All right. That's enough of that. That's just a pattern now. The moving averages. All right. Take care and God bless.